everyone, welcome back to UK 360. Today we have Ludo from CBRE to talk about the current UK housing market and any future forecasts. So, housing prices right now in the UK have fallen quite dramatically at 5.3% compared to a year before. What has contributed to the sharp decline?
Wow, tough question to kick off. You've got to look at it in multiple aspects. So the UK is broken down into quite a lot of different parts. So London is its own micro market, and then you've got the regional cities as well, Birmingham, Manchester, etc. If we look at really what's probably stunted some of the growth in the UK, things like the Help to Buy scheme that was government backed, that has really that's completely stopped. So the government have stopped putting that into the market. And that has stopped a massive number of people being able to enter the market as first-time buyers. So that is definitely going to have a major impact at the lower end of the market. Obviously at the higher end of the market, I'm sure we'll come on to later, the interest rates and what's happening with global markets in terms of debt being more expensive, I think has played a massive part in slowing that down slightly. But really it's just finding the opportunities within the market that are there for potential would-be investors to look at. But we definitely foresee, and I'll touch on it later, long-term projections across the market do look really positive in the UK.
So what effect of the rise of interest rates I've just mentioned have an effect on the mortgage market?
Again, really good question. So I wanted to run a couple of numbers here because I thought it'd be quite interesting for the viewers. So in the UK, actually not every property obviously has a mortgage rate. The vast majority don't. So only 1.4 million households in the UK have a mortgage. And if you bear in mind, a number of those mortgages are either 2-year or 5-year fixed. So a lot of people that have agreed those deals or those mortgage rates in the last couple of years, they're now coming up to renewal. They're the people that are going to be stung by this. So if we take London for an example, and someone in their 30s, maybe early 40s, their average payments are probably going to jump up about £360 a month. So that's quite a big jump in terms of someone where average salaries in London are around £35,000. So that's where we're going to see the difficulty of people being able to have that affordability. But the good news is rates do look like they're stabilising and coming down.
So the Bank of England has paused its consecutive hikes on interest rates this September. Would you say this could bring back a little bit of confidence in the market in the coming months?
Absolutely. I think it's a massive part of the market and a driver of the market. There's something we actually have seen is a huge increase in cash buyers, actually up 18% year on year across the UK. So for people that want to enter the market with prices obviously on a slightly lower trajectory than they have been, now is a great time. If you don't have cash, it's not the end of the world. Debt options are still available and mortgage options are available. Current rates, at the moment, we're looking at around 5.75% start for a Hong Kong based investor buying into the UK. Obviously that depends on how much money you're putting in, where you're buying, all those sort of things. But Barclays, big UK retail bank, their head of mortgage pricing, Tom Smart, has come out and specifically said, his quote, "The mortgage market is in the eye of the storm. It only requires a modest reduction in rates to reignite the market. So now is the time to invest, so get ready to take advantage of the market when it returns." I think if the head of lending at Barclays is saying that, it shows there is obviously some momentum to go into that space.
So moving from the housing market more to the rental market, how has the rental market been performing with the raising mortgage rates?
So actually the rental market is on the completely other spectrum to the sales market. It's been absolutely flying. There's not enough stock to keep up with the demand. So we've been seeing 12% year-on-year increases in terms of what landlords are achieving, and we don't see that stopping. Actually, London hit new records where I think it's up to about 39% of people's salaries are now going on rent. Now there will be a glass ceiling at that point, but I think while stock remains relatively low because we're just not building enough homes, the opportunity there for landlords and for rents to continue to increase is huge.
So how do you expect the housing market to look in the coming year, and do you think we expect to see the housing market make a return after this lull?
So we do. So if you look at the numbers, we expect prices across the board to outperform where they were pre-COVID levels going into 24, 25 and onwards looks really, really positive in the UK. London's target is about 50,000 homes a year. In the last few years they've built about 31,000, so they're way short. Compounded over 5 years, they're about 120,000 homes down of where they need to be. So that's really where the issues lie. There's not a huge amount of stock in the market for people that want to buy it. So that's going to be the biggest driver. Obviously, until they sort of fix that issue, prices are just going to continue to rise because there's just not enough to go around for everyone that wants it.
Thank you, Ludo, so much for joining us today. Make sure to follow CBRE on all social media platforms and make sure to follow UK360 on Facebook, Instagram, and YouTube. Thank you.